Ready. All right. So I would say one of the areas that people are screwing up these days is they don't do prep with the heat maps. What they effectively do is like, they don't even look at it, on the weekend. They don't look at it on Monday morning. What they do is like they think it's just there where they can kind of log in the middle of nowhere, and then they can look at the map. They'll look at where the keynote is, and they'll be like, okay, like the price is at, like I'll take SPX for an example, but they'll be like, okay, SPX is at 64.50, but the keynote is at 6400. So they're like, okay, now it can go down. And what they're going to do is like, they're just going to wake up, they're going to look at the map, they see the keynote is 50 points below where the current price is, and then they slap puts. And then they're like, well, fuck, why the heck does the price keep on going up, right? Because they're expecting the price to go down towards the keynote. This is a misconception, and this is one of the big caveats that you have to kind of pay attention to. This will literally like you're not using the tool correctly if you're not understanding the whole notion of price delivery. If there's a king node down at 6400, if the price on SPX came down towards 6400 and it came within like 5 to 10 points of it, so it came within like 6410 or 6405 earlier in the morning and then it bounced, there's no guarantee that the price is going to go back down to 6400 and 6405. Okay? This is a very, very co important concept to understand because I think one of the, like, I explicitly saw somebody make this mistake. They said they woke up late in the morning. They looked at their phone and opened up Heatseeker. They saw that the target was at 6400 just based off of how bright yellow it was. And then they just slammed puts. And then they went to go take a nap again. And then they got blown. They got their back blown out, right? And that's because they didn't bother to look at the chart to see where price has actually been delivered from. So when you're looking at these heat maps going forward, it is very, very important to make sure that price is not already having been delivered from a king node, okay? This is important, and like this is kind of why I mentioned to a lot of people to play deflections and play reversals off of nodes instead, because even if price was at 6450 and the king node was at 6400, if their whole notion is to play deflections and reversals off of the nodes instead, they wouldn't be taking puts on that trade because it already bottomed out and bounced 50 points. Unless unless the new king node was at 6450 and you're expecting a rejection from 6450 back down to the downside. That is a trade you would want to take. Okay? But you don't just blindly look at the heat map and say, "Oh, look, the big node is at 6400. I'm going to go ahead and short it." Like that is a very one-dimensional way of reading the maps, and if you're playing and trading like that, then that probably explains why these maps in Heatseeker is not working for you. Okay? I mentioned this in my previous session as well. I'm mentioning it again today, because I'm still seeing people make mistakes, which kind of leads me to believe that people might not be watching the videos. Okay? Number two is, let's say theoretically, price was at, actually, let me just go ahead and open up a chart. Like I'm gonna show this to you in visual format so it makes a little bit more sense. Bum, 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 bum. All right, so I got my chart opened up. So this is all theoretical, okay? I'm gonna draw theoreticals. Let's say the king node for the day is at 6600, okay? All right, let's say theoretically the keynote is here at 6600. We always mention it could start bouncing within a plus minus 5 point range. So we'll draw, I mean, technically, like it could, if it's a purple node especially, it could even overshoot 5 points. So this is your bounce range right here, like your reversal range. For anybody that has traded 0 day expiration, you would know that if you bought calls at even 6605 because you're giving a plus minus 5 point range, if it dips down another 10 points from here, like you are down like 40 to 50% on the trade, okay? Like this is why the strategy that I have is to make sure that you're scaling into your entries. So like you could take like a half position or like a 25 per point position. If it dips lower, then you can go ahead and scale into a full size. But what you shouldn't do is front run this move and be in a full size right off bat. because you don't know how much more it's going to draw down from there. So these are the reasons why I tell you to scale your entries, but it's also the reason why I tell people to size for zero, because what happens is if it doesn't bounce here and it goes down lower into the range, if you've got your stop loss set at 30% or like 40% or even 50%, there's a high likelihood that it could hunt you out, and then it'll hit a massive reversal from here, which ultimately sent it flying. Like, I mean, this single leg right here took it up 50 points. And like you would literally miss a 50-point move within within an hour just because you had a stop loss set on a 0-day expiration SPX, okay? So again, the way you want to trade the heat maps is in a reversal format. If the king node is at 6600, I don't care where the other maps are. If the king node is at 6600, and if there's not a much, much larger node below it, like there's a very, very high likelihood that it's going to go ahead and bounce in this reversal range, okay? The next misconception that I see a lot of people making is they don't play this reversal because they don't see any upside nodes on the Heatseeker map, okay? They don't see any upside nodes, so they assume there's not going to be any upside pull, so they're not going to play it. The key thing that you have to remember is after the price taps a king node and it reverses, number one, there's a very, very high likelihood for the map to reshuffle in your favor, meaning dealers are going to offload a little bit of exposure down here, and what they're going to do is they're going to reposition back to the upside. You want to be in before that shuffle happens, because by the time that shuffle happens, you'll be chasing, right? So, as contrary as it sounds, like a lot of people and a lot of gurus teach you not to predict the move, not to try to forecast the move, not to try to front run the move. Like, I shit you not, that is literally all I preach in my strategy. In my strategy, I preach to people be ready to front run, be ready to snipe entries, be proactive. Because guess what? You actually could predict and you could forecast where the markets are going to bounce. Like previously, it wasn't possible because you didn't have Heatseeker, but Heatseeker literally shows you where those invisible walls are. So you have to be able to use it to your advantage, okay? Now, the reason why you should still go long here, even though there's not an upside magnet, that's number one, which is after it hits the reverse button, what can happen is you can see reshuffling back to the upside, and then it's actually going to be in your favor. Number two is if there's no upside nodes above 6600, that's actually really, really good because that means there's no walls that are upside, which means it could literally do a full send reversal because there's no resistance it's going to get caught up on as it bounces upwards, right? Like even look at this reversal, like it's literally all green candles. Like there is very, very little resistance in the way, even from a price action standpoint. And most likely it's because above the 6600 node, like it was probably clear skies on the heat map up until a particular level, probably up to like 6650 or something like that. Okay? So misconception number two is that just because there's no upper nodes after a potential reversal or bounce level does not mean it's a bad idea to go long. It's actually a great idea to go long. Like my suggestion would actually be don't go long if there's a call wall only 5 points or 10 points above this bounce level, because then you're only going to be able to scalp like 5 to 10 points off of it, right? But if the map is showing you like a pretty good range where there's like no other prominent nodes after it potentially bounce, like that shit can literally rip. And like those are the perfect setups. Like after a reversal, you want clear skies to be able to like, capture those gains. And I think that's a really, really big misconception that I'm seeing that people can find a lot of value in. Okay? Um, Sad, I don't know if I'm understanding your question. You're asking, but doesn't that node should fade away if it bounced? After it bounces, in a lot of cases, it actually does fade away. What you'll notice is that, like, if a node had like 30 million in terms of GEX, what you'll notice is that it'll start going down to 27 million, it'll go down to 25 million, it'll go down to 23 million. The problem will become if it bounce. Let's say this node right here is like, 35 mil. Okay. The problem becomes if we see a bounce and it's going up, but you see a continuous accumulation of this node down here to like 60 mil, even though price is going up. Like even if price is going up, if these lower nodes are going up, then what you have is a bearish divergence on the heat map, and there's a high likelihood and probability that price will actually come back down to retest this level, okay? But in a lot of scenarios, what you'll see is this price will actually bounce very hard here. And as it reverses, what you'll see is that this node will start diminishing from like 35 mil to like 27 mil to 25 mil, and you'll see an upper node here start to accumulate. This upper node will start to accumulate after the bounce though, which is why I want you to play the node deflections and don't wait for the confirmation of a new node to form upside. Like you don't need to wait for that confirmation. Like if you wait for that, you're just gonna end up in a situation where you're chasing nodes. Okay? Like you've got to trust that these levels are gonna reverse, and like that's how you're gonna snipe the best risk to reward entries. Okay? Yeah, let me go ahead and try to pull it up real quick. 1 second. And you guys know you guys could you can pull up the heat maps too, right? Why are you guys making me do all the work? All right, hold on, let me try real quick. This was at 8:36 UTC. 8:36, 11:36. Now, Thomas the Train, you pulled the wrong timestamp. All right, I think it's right here. All right, so right here, it was at 6610. You've got double, like over here, like the crazy thing is, like you've got double stacked king nodes over here. Well, you got both of these right here. And it bounced within 6603.86. Okay. So now I know a lot of people are going to be like, okay, like how do you know it's not going to pop down to 65, 40 or 65, 35, right? Like these are gatekeeper nodes and like these are very, very strong gatekeeper nodes. And also on top of that, like if it bounced back up to the upside, like you can actually see that these areas are like not very prominent values. Like sure, you've got a 6610 right here, but like, I mean, 6610 was literally like 5 points away from the bounce. And then once it cleared that, like it literally just exploded. Like this is all like if you look right here, like this is all like free ground to just like shoot through. Like like you can explode through that after a reversal, right? So there's no resistance from the bounce. Like these are actually really, really good reversal setups to take. And I think the contrarian opinion that a lot of people were kind of thinking and seeing is like, oh, but there's no upper magnet, so what is actually going to pull price up, right? What is actually going to pull the price up? But I bet you if you looked at maybe Aspire QQQ, you will see that there probably was very strong pull on one of those to the upside. So you actually had great confluence between SPX and SPY, which is that SPX has no resistance on the map to the upside, and SPY probably had pretty decent pull to the upside. I'm actually going to pull it up. And I don't even remember, but like I'm just going to assume that this is what happened based upon what I'm seeing on the price action. Like that's literally how much confidence I have in like Heatseeker and like how it correlates to price action. Like I would look like a dummy if there wasn't strong pull on S SPY at this point, but let me just go ahead and see real quick. 1136. Yeah, Devinder. So SPX is commonly used as a hedge by market dealers. The thing I liked about 6600 here is that it's a pretty large like gatekeeper node right here. But also like it's a double stacked from like the current day and also the next day over. Okay. So generally speaking, like as you're going into the second half of the day, like the next day over node could actually have some impact and pull. And I just like the fact that it was double stacked on the first column and the second column. And it was a double bottom. Yep. Yeah, you always need to be careful. Like the thing about SPX is like the reason why I tell people to use SPX and SPY together is because like it can always there's just a lot of times they use it as a hedge node. Like it's pretty annoying, but it happens. This is at 11:36, right? Yeah, so this is what SPY looked like, and it had a bounce node at 650, it had a bounce node at 658, and then the strongest pull upside was 660. So that's a 2 point bounce potential, and on SPY, like 2 points is actually a pretty good amount. That equates to 20 point bounce on SPX. So a minimum you would go for like a 20 point run, and then you can go even higher from there. Can we conclude that when price comes down to the king node and if purple is below the king node, we should expect a bounce and the king node should act like a gatekeeper? Yes, that's how gatekeeper nodes can be used. Like if there's gatekeepers, like it's almost like if there's a gatekeeper, like there's a high probability that it bounces and reverses at that level, and after the bounce, you'll actually see a shuffle. Like I posted this in the docs because I see this happen very, very often, but there's a very high probability of that happening. Yeah, shorty, like I mean, yeah, if you didn't play it at all, that's fine. Like I just hope that people are not shorting it there. Because if you look at the QQQ map, if you look at the SPY map, if you look at the SPX map, all three of them aligned perfectly and they all had floors there. How do I do my chart selection? No, I actually haven't done a watch list in the morning for like months. I primarily only trade SPX, so like I usually just wake up in the morning and then I just take a look at the heat maps from like 6:30 onwards and trade from there. Like a lot of people ask me like, "Hey, what do I think the market's gonna do?" Like, "Hey, what is your price target for SPY and SPX?" And like people that are trying to get price targets for SPY and SPX going out into the future, they're not gonna get this from me. Like I think there are some people that are really good at predicting that. But for me, like I'm primarily a day trader, so I generally try not to forecast too far ahead. But one thing that I do just keep an eye on is like I keep an eye on the VEX maps, and then I also keep an eye on VIX. Like VIX was very, very telling like these entire past 2 weeks because it had a node all the way at 32 for November. And like this was there for like 3 weeks now. And VIX went all the way up to like 25 recently, or like 28 or even higher. So it actually played out pretty well. I mean, I hope everybody paid attention because like I've been screaming this one from the fences. But yeah, it went all the way up to 29. And like when I called this one out on the VIX, like I shit you not, um, like when we called out that 32 node, like VIX was literally at like 1642. And like I remember it was at 1642 because on my dub I went all cash and what I was trying to do is I was trying to load VIX if it came down to 15. And like, frankly, like it never came down in time for 15 in October. Like it just kept on hovering at 1625. So despite knowing it's gonna rip towards 32, like I didn't get to load it because like it just stayed elevated the whole time. I mean, dude, you should not be holding your VIX call debit spread still. Like, if it's gone all the way up to 29 and like you entered at 16, like I just don't know why you wouldn't take profits all the way up here. Yeah, Josh, like I don't like did you sell some at least? Because like VIX got fucking destroyed on Friday. How did you miss the overnight rip up? Yeah, if you missed that, dude, like I don't know, man. Like you had so many opportunities to solve VIX calls. Like, I mean, if you were in, you probably should have been in like near 16 when it was consolidating down here. Because even when I was down here, like we already saw that 32 node pop. So if you didn't take profits on any of these pops, then yeah, I don't know what to say, man. That's a fumble, like big fumble. HP, yes, nodes can act like magnets, and they often act like walls as well. Uh, is it is it correct to assume, assuming no reshuffling in the morning for SPX to migrate towards 6600 on Monday? There most definitely is going to be reshuffling. Like the reason the 6600 is there is because people are hedging to make sure that nothing happens over the weekend. But let that wash off. Like on Monday, it'll start to wash off, and like this is why I generally never recommend trading in the first 30 to 45 minutes, especially if you're a noob, because noobs have trouble distinguishing which nodes are potentially hedge nodes versus not. The biggest percentage I've caught personally is probably, I mean, I've hit like 10,000% trades in the past, but this year so far, 5,500% was the largest one I caught, and that one was for UNH. We caught that one based off of the Vex map, and yeah, that one was a pretty massive one. I cashed out 95K on that one overnight, and that was like a lot of position too. Like the speculative like Vex nodes that I see that I try to take, like I usually always size for lottos on those,
41s.
and then got lucky because the 13F filing. So yeah, it was like a 5K position that I swung as a lotto, and then I sold it all for like 100K on Friday. So that's a 95K profit. No, this is a long time ago. This is like before I did the partnership with Owls. But yeah, UNH, I've been literally telling people to buy fucking UNH for ages. Like all right, I'm muting everybody again. But yeah, if you go through my X feed, like I've been screaming UNH to like buy the dip on UNH for fucking long ass time and nobody listened. And like now everybody wants to buy UNH. Yeah, because UNH, like even as it was dipping towards like low 200s, like there was a massive Vex node to the upside. So I knew like something was gonna happen and eventually you would get some kind of news. I mean, even if I'm taking swings, like I'm usually only taking like 3 to 4 weeks out. So yeah, the heat map does go out that far. Bum, bum, bum. So you're saying what platform do I recommend to trade on? Generally, Schwab or Interactive Brokers are legitimate brokers to trade on. If you're serious about trading and becoming profitable, like I wouldn't recommend trading on Robinhood. I actually prefer Webull more than Robinhood to be completely honest. Like I've had so many reliability issues with Robinhood where like sometimes I would be stuck in like a 100K position on it and like it wouldn't let me sell, it wouldn't let me like put a stop loss and like I just can't risk that. Like that's too crazy for me. And Thinkorswim, like whenever they have bugs like Schwab, like if they have bugs or if they had like platform issues, like their support is really, really good. So if I reach out to them, like they'll actually cover a lot of times like they'll actually cover their mistakes. So if you want to be a pro trader or if you've got more than 100K in your portfolio, like I would highly suggest going with Schwab or Interactive Brokers. Thomas the Train, like I think the VIX is all done. Like 32 was the node that I had targeted, and like we hit 29, and like that's pretty damn close enough for me. Like we got VIX crush. That means like, maybe the market starts going back up soon. We'll have to see. Yeah, if you see 22, like it's probably almost topped out. Like, even if we get like a little spike mid or early week, like you could probably expect a crush going into the end of the week. Why is everybody saying Yibo needs to turn the camera off? Why is everybody being mean? Oh, Yibo is in the bathroom. Okay. Hey, you probably want to turn the camera off if you're using the bathroom, buddy. And this one's gonna go on YouTube too. All right, Yibo's gonna have to send me 1 Bitcoin to delete this video. I mean, SP like swinging SPX calls is like not really that good to begin with. Like you would have to have a pretty big move if you're going to swing SPX because the overnight theta kicks really, really hard for SPX. So I think a lot of times like you're probably just going to end up getting like wrecked by theta. But yeah, I mean, I swing SPX sometimes based off of heat map. It's just like there's just so much shit and like news that can hit overnight, and like we just can't really predict what's gonna happen. So, if you're on interactive brokers, you can actually buy and sell SPX in the overnight session. So, if you do want to swing SPX overnight, I highly recommend and suggest doing it on interactive brokers. That way you don't get stuck in a trade. Like I've swung like SPX puts before where the market would be down like 1.5% and my calls would be up like 400%. And then like Trump would drop some news and then like we would have like a V-shaped reversal and then I would end up red by the time the market opened. Uh yeah, Robinhood sucks for not offering an API. Like it's like absolute shit. Yeah, a few veteran gems you can absorb is to just listen to what I'm saying. Like, a lot of the information I share and like the context I share with regards to how to use Heatseeker is based off of like my 16 months of experience using it to trade. And quite honestly, like I just know these things. Like it's become instinctive at this point. Like the thing I always tell people is like I see people like messaging me and they're saying like it's my second day with Heatseeker, like, I lost money both days, like I don't think I'm getting it. And I'm like, you're not supposed to get it in 2 days. Like that shit's crazy. Like like, dude, like you're literally buying this shit and you're like, yeah, I'm gonna learn it in a day and like I'm gonna become profitable. Like, no, that shit don't happen. Like, you've got to study it and like depending on how serious you are about it, depending on like how many times you're watching the videos and reading the docs and like practicing, like you're not gonna consistently make money. And like it goes the other way too. Like if people are saying like, yeah, this is my second day with Heatseeker and I turned like $3,000 into $25,000. Like this shit's crazy. And I'm like, man, those are the people I'm worried about because like there's something called beginner's luck and like sometimes like you're just gonna be on a hot streak and when you're on a hot streak like you've got to take a step back and you've got to let yourself cool off um because the market is always gonna find a way to humble you. Like the thing about options trading is like it's so easy to get overconfident and it's so easy to get cocky thinking that you're like undefeatable and like I literally see this happening in real time because like on Friday when I clearly told people to like fuck off and not trade, like they're just trying to bang out trades left and right, even though the map was really, really shitty. Like that's the thing I tell people. It's like, I mean, for the people that took my boot camp, like, I've got a list of kill switches in mind, and like I always tell people, like, if you're on a hot streak where like you're going and telling all of your friends and family and like DMing me that you're on a hot streak, like that's a very, 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 very important sign that you should just take the week off. Like take the week off, allow yourself to come back down to earth, because if you're cocky, the market dealers are gonna hit you with the shaft, and like, you're just gonna get fucked. And because you're getting fucked, what's going to happen is that you're still in this overconfident mindset. You end up revenge trading because you're trying to make back the red, and then you're going to end up 10 steps backward from the one step forward you took. Okay? So like these are the gems I have. Like most of the gems I have are like very psychological things and like very contrarian things because everybody up until this day has been conditioned to think and trade a particular way that in my opinion doesn't work long term. Yeah, well, 4 weeks and you still feel dumb, that's fine. Like I've been using this shit for like 16 months and I still learn new things every single day. Yeah, there was indication on the AMD pop, like it was near a floor and it had like, potential like I think 10 to 15 points upside. I just didn't think that there was going to be news. But if you traded purely on the maps, like you still would have taken, I mean, it was still a good swing trade to take, like regardless of news or not. So if you want, like, go to the Heatseeker bot channel and like pull up the map from before the news hit, and you'll notice it. Like, it was actually a pretty good asymmetric risk to reward setup to the upside. And you could have taken it. Yeah, yeah. First Solar was insane. Like that was like one really, really good setup where even 3 weeks before it hit 250, it hit it perfectly. And on top of that, it rejected it perfectly, and I think it dropped like 20 points. So like the cool thing is like with king nodes, like after it hits, like you could play the reversal off of them in a lot of scenarios, and that plays out really well too. Like United Airlines was like another really good trade. Let me pull this one up real quick. So United Airlines was like a really good one because what happened was you had a floor down here at 100, right? And then you had your first node right here at 105, and then you had another one here at like 110. And then pretty much what happened was if you're playing UAL, you could have longed it off the 100 node all the way up to 105. The other thing you could have done is you could have played the rejection from 105 king node, and you would have rode this bitch all the way down. And like, you can make money on both sides. So like the cool thing about it is like if you miss a move to the upside, like you can always fade the move back down to the downside in a lot of scenarios. I think Tesla also played out really well on Friday as well. 430 was like a really important node, and 440 was another really important node. And what you'll see is that we tapped it, we reversed all the way back down to 430, and then it even went back and went back up to 440 to close. So like these levels all play out really well. I think BMNR, like this one closed right at 50. I think Han caught this one. Han, like he shorted it from the top, he hit it. RGTI hit 43 or like damn near 43. And like you could have also played the reversal here, and then at least it's a 5 point move up. Yeah, I think RGTI, like I was telling people, like, yeah, 43 is going to be a good dip buy. And then, yeah, it pretty much bottomed there. Architect, is Architect the architect that I know? Because you don't type like him. Yeah, MP played out really well too. Oh yeah, you're another Okay, I gotcha. I thought you were the architect. All right, so that's my yeah, I mean I just covered like a lot of examples there, a lot more than I was expecting to cover. Another word of advice, just because there is a node that you think is going to hit. Like, don't just blindly hold your position for that node to hit because, especially if you're playing options, like there is something called theta. Theta is effectively like for every dollar, or sorry, theta is time decay. So pretty much like as time passes by, like even if the price is moving in the direction that you intended, like your option premiums are going to decay. So sometimes like it's not even worth waiting for a ticker, for example, to hit the king node. And also, like, there's a lot of scenarios where like nodes can reshuffle, depending on the market, depending on like new market dealer participants. So especially if the market's crap, like a lot of times, like if you play a node reversal, like the reason I preach playing node reversals is because if you're playing the reversals, you often, like in most scenarios, you don't even have to wait for the mo full move to play out after the reversal because even if you play a portion of it, it's easily going to be like a 50% or 100% trade, which means you can de-risk a lot going forward. Yeah, Devinder, I went over that. For non-index tickers, weekly expiry is Friday, so how can you plan to play on Monday and Tuesday? Like you just have to be a lot more disciplined in terms of like what setups you're taking. Regardless if it's Monday or Tuesday, like if you're playing node deflections, like you'll be fine. Like it's only a problem like if you're playing it in no man's land or if you're trying to chase a node, like then you're gonna get fucked and you deserve it if you do. Like this is like the number one thing I have to preach, and like if I see people not listening to it, like you deserve to lose the money. Like people just have to learn to play reversals. Like I know everybody's been conditioned to like wait for confirmation or like, look for a breakout, like wait for the momentum, like wait for the smart money to get in, but like why are you waiting for all that? Like get in with the smart money, right? Like that's literally what they do. Like they wait for the liquidation to happen and then they buy really cheap. So why should we not be doing the same thing? Like we know where the liquidation levels are. Yeah, don't diddle in the middle. It's like when I look at some like people trading, and I'm looking at them enter their trades, and I'm like, why are you entering a trade when there's only 2 point upside on that ticker left, and it's like Wednesday? So Oscar actually did hit almost 25. Like that's the thing, right? Like this is why it's important to understand where like price was delivered from. Like I actually left a comment on somebody's post for this one, but the upside node target for Oscar was like at 25 or something like that. And again, like this entire week has been pretty bearish. So like if Oscar already went all the way up to like 23.79, like your upside on this, like there was barely any more like juice to squeeze on this one. Like you had like another like 4.8% potential move. And for a ticker like Oscar, like that's not really a good risk to reward. Like you just let these things go. Like the node has been delivered from 25. Like let's assume that the market was also bearish, so just let it be. Like that move has already played out. I mean, you're gonna find out if the reversal is working out or not, like after you take the trade. Like if you wait for the reversal to play out, like it's already played out, right? Like I guess what I'm saying is like what is the difference in terms of like your risk, whether you try to snipe a reversal and it draws down a little bit more, or you're gonna try to trade like let's see, like you're gonna try to trade a breakout right here. Like you're gonna enter on this breakout candle and then it goes up and then it pulls back all the way and then you fucking eat all of this drawdown. Like what's the difference, right? Like you still have the same, like it's the same thing. Like you're gonna have like potential risk of drawdown regardless. The problem with the breakout trades is that you're chasing a green candle, so you're buying when IV is sky high. So even if you get these chop candles, like you're barely up, and when you get this pullback candle, like you're gonna be down like 30 or 40% already. Yeah, EOS was added like very, very recently. Like I have a feature to make sure that people are aware of like when new tickers are added, but I posted in my channel and I posted in previous videos. When new tickers are added, you got to give it at least like a good solid 30 to 60 days to like catch up and like seed data. So I'm not gonna add any new tickers because like whenever I add new tickers, like people literally go to it and think they should be playing off of it. Like you shouldn't be. So I'm gonna add like a tooltip that says like when it's been added so that people don't like trust the data too much on those newly added tickers. I guess I can't assume that everybody listens to and reads everything and like checks all of this stuff. So I'll just hold off on adding new ones for now. Yeah, RKLB, yeah, that one looks like it's gonna struggle to break above 67.5 or 67. Yeah, that one might struggle a little bit. I think RKLB is at like all-time highs right now, isn't it? Or near. Yeah. This one needs to come down a little bit. Yeah, JR, like you're looking at that map, but again, like these are all double-digit numbers, so like you shouldn't even play this one, buddy. Like this is just like really, really thin on data. Like I usually ask people to have at least 4 digits or more in terms of the numbers. Do I have entry rules? Like always wait for the over and undershoot. I mean, I covered it earlier, which is that my entries, like I generally front run by taking like a starter position or like a half position. Yeah. That way, if it prematurely bounces, like I'm still in the trade. And if it goes deeper, like I'll go ahead and scale in and be in like a full size at that point. If a ticker gaps up to the king node, would you take puts off the open? Yeah, you could do that. So if a ticker gaps up to the king node, you can take puts off the open. A lot of what happened with QQQ this week is that the price gapped up above the king nodes and like no further nodes accumulated to the upside. Like that's a very, very good signal that price is gonna fade throughout the day. Yeah, I got an X channel. Um, So flyover, like generally the way I trade with like node deflections is like so if I take like a full size, like that could be like anywhere from like 20K to like 100K in terms of the position size. I actually size heavier on my day trades because my goal is just to make a lot of profits, and then what I'll do is like I'll scale it down to like a lotto swing position to enable the move to play out in full. That's just like my strategy. Like I just don't like leaving a day trade open for too long. First of all, because of Theta, but also because like I'm really busy working on like product development or trying to help out the users. So yeah, generally like nowadays, like I'm in and out really quick. But it doesn't have like not everybody has to trade like that. Like I only trade like that because that's the only thing I can afford to do with the time I have. Yeah, if you're used to always waiting for confirmation and like people still like live and breathe by this, but like I bet you like my P&L probably smokes people's P&L of like people that wait for confirmation. Like I hate waiting for confirmation. Like it seems like the stupidest thing to do, like no offense. And like anybody that says wait for confirmation, like no offense, but I think it's the like it's really really dumb. Like if you're waiting for confirmation, like you're literally trading like every other like retail nuthead that's out there. So do you really want to trade like every other retail nuthead out there, or do you want to be contrarian and like trade like an institution, and then by the time people have confirmation, like that's your first exit point. Like, even the Figma reversal off of 50 that like Keon trades hit, like he literally sniped that to the T. Like he bought at like 51 or like 52 or something like that. And then it pulled back to 50, then it went up to like 70, and then that's when you saw everybody on X starting to blow up saying like, "Oh, Figma is going to blow up." But then that dude already ate like a 20-point move, and then like by the time it's blowing up on social media, like he's already out of the trade and like he's risk free, right? So like if you're waiting for confirmation, like you're getting in with the rest of the herd, and like that's the dumbest thing you could do. Like it's not good. Yeah, John, I mentioned I got a feature that's gonna be there, so we're gonna have timestamps for when new tickers get added. And there's gonna be like an icon that indicates like when it's been added. So until I have that in place, I'm not gonna add any new tickers. Yeah, you could trade XSP. XSP is good because it gets the same 60/40 tax advantages that SPX does. The only thing you have to be careful for XSP is that the liquidity is not as good as SPX. So getting in and out of your trades with good fills can be very difficult. And especially for the zero day expiration, like being able to be like agile and versatile is very important. So I don't trade XSP. Like a lot of times if I just want to trade like smaller like contracts, like I'll just take SPY instead. It has better liquidity. When is the Heatseeker live again? I mean, it's live right now, but the data is just not updating because there's not like dealers don't work over the weekend. Yeah, I trade straight off of Schwab. Yeah, Thomas the Train. So like your RKLB example, like if it rejects, like you could take puts, but the important thing to keep an eye on is after it rejects, are the nodes at 60 and 59 growing while the 67.5 and the 67 are diminishing? Or are the 67 and 67.5 growing and the 60 and 59 are staying flat? Like it's very probable that eventually, even after a rejection, what's going to happen is that you're going to have equal pull from both sides, and it's just going to get stuck in the middle somewhere at like 65 or 64. Yeah, Lily is like somebody is waiting for news on Lily. Like the things you guys have to remember is like not every single map is always going to play out. Like, I'm very upfront and honest, and what I'll say is that there are trades that literally just suck and won't play out according to like the nodes. Like MicroStrategy is like a very common one that I tell people to like ignore in most scenarios. Lily is another one because it's very susceptible to news, and I'm pretty sure that whoever has the positioning for the 900 node, like they're probably expecting like some kind of news. Scaling in is cool. At what point do I pull the plug? I pull the plug if when my trade goes to zero. I think 70% of the time I let my trades expire at zero if it doesn't work out in my favor. Because the trades that do work out in my favor, like I'm slamming like 500% to 1000%. Jonathan, I'm moving to New York in December, so you can come visit us then. I think yeah, maybe I'll open an office and have a golf simulator in there. Yeah, I mean, shorty, like, there's a lot of nuances to it. So, like, the first thing first, like, yeah, you don't have to wait for confirmation of a reversal to enter. But you should still look at like, so for example, like if SPX is slamming into a king node like to the downside, like you don't just look at it and you're like, all right, I'm gonna snipe calls, right? Like what else do you care about? You care about QQQ. You want to see if it's gonna also be near a floor. You want to check SPY. Does that have upside pull? Is it near a floor? Like those are all things you have to consider. Like you just need to like if you want to be a good trader, like you can't be multi-dimensional, like you can't be one-dimensional in the way you think. Like if you think about like the way you drive, right? Like when you're driving, like you don't just look forward and you just drive, right? If you want to take a left turn, like you look behind you, you look at the mirror. If you want to take a right turn, you look at the mirror, you look behind you. Sometimes you might need to slow down to take a lane change. Sometimes you might need to speed up to take a lane change. Like driving is complex and difficult, and there's so many variables that require you to have multiple different strategies and tool sets in your belt, right? Trading is the exact same way. Like just because you have Heatseeker does not mean you can become a one-dimensional thinker and become successful. Like it gives you forecasts and predictive intelligence in terms of like where the market could potentially bounce, where it could potentially go to, and like that's the biggest problem that people have. But that doesn't mean that the rest of your fundamentals go out the window. Like I think the biggest mistake and the biggest misconception is that oh, if I have Heatseeker, like I can literally just press on the gas pedal and I'm gonna make money. Like it's not like that. Like if you give me all of your money, then that's what you got to do. Like that's all you got to do. Like you could be one dimensional and be like I'm gonna give Glitch all my money and he's gonna blow it up. Then yeah, like that's gonna happen. But like if you're gonna trade it on your own, like you still have to become a somewhat decent trader in order to make money. I mean, Hims had already tapped the king node like throughout the week, so it's probably just a rejection from the king node, right? I mean, Hims literally ripped last week. I mean, shit. I mean, didn't it just it ripped all the way up to 65? Like, wasn't there a keynote at 65? I mean, there's no reason to be long on Hims after this shit happened. Like, that's a fucking massive rip all the way from like 52 to 65. BMNR is like not as tricky. So I think MicroStrategy is a little bit tricky, like because of the things that Sailor is doing, in terms of like the dilution and like the MSTY and all of that. So it's just a little bit fucky, and like I just don't like people to trade it. Like there's just other tickers you could be trading. Like MicroStrategy is really tough because the premiums are also always expensive. Yeah, Beyond is like, I mean, it went up like 40% on Friday, and like Heatseeker was saying it's gonna go up. So I mean, this shit ripped pretty hard. I mean, it didn't go for the final target, which is at like one, but like it still had a 45% run on Friday. No, at the peak it was like 40% plus. Like I know because I had shares of Beyond and like I sold it at like 40 something percent. Like I sold it at like 30 something percent and then I remember it topped out at like 42%. Yeah, like so it closed right here, right? And then it went all the way up here. So yeah, at the peak it was a 45% return on Beyond. Yeah, it closed being up 24%, but it was still a 45% move. And like we called the reversal on BYND on Thursday. We didn't enter and chase on Friday. Yeah, you expected Hems to reverse at 52, but like it did reverse at 52, right? I mean, if you caught it at 52 here, like on Tuesday, like you would have caught a fucking massive ripper right here. And like this is why it's important to consider where price is being delivered from. Like if you miss this 25% move, like just move on to a different ticker. Like don't fuck around with the same one. My sizing strategy is probably different than a lot of people's sizing strategy. Like generally, I expose like 10% of my portfolio in swings, and then I'll spend the remainder of the 90% on SPX day trading. More than 90% of my entire profits are from SPX. Like I'm actually not that good of a swing trader because like I'll often enter trades and then forget about it and like not look at my portfolio, and then I'll open it up one day and I'll be like, oh shit, I'm down like a couple $1,000 on this. Yeah, like trading is not my priority right now. My priority right now has just been on like development of Skylit, hiring, onboarding devs, and then trying to feed my partners, and then trying to make sure everybody can get rich off of it. Like that's my priority right now. Is there a way to tell the likelihood of whether a node will reject price or get blown right past? Just look at the chart and do some basic TA, I suppose. If you play reversal bounces off of nodes, there is a probability that the heat map can switch up, yes. But in a lot of times, like it'll switch up in your favor because after the reversal happens off of the node, that node gets absorbed, and then the dealers will reshuffle and reposition their exposure in the opposite direction. And that's why I always tell people to play deflections off of nodes. Like I bet you a lot of times people will look at a king node and then they will hesitate to pull the trigger on the reversal from the king node because there isn't another strong king node in the opposing direction. And then after the bounce happens, what they'll notice is that the reshuffle happens, and then I shit you not, like a king node will show up in the opposing direction, and you'll be like, "Fuck, I missed it. Why didn't I buy the dip?" You didn't buy the dip because you were scared. You were scared because like you didn't see other nodes forming yet. I mean, as of now, yeah, that's what it's looking like on QQQ. But that can always change and update throughout the day. You want to see more time on the heat maps and sh Cameron, how do I know you're not just a non-paid user and you're just trying to get free heat maps tonight? We already reviewed the Friday SPX, didn't we? I mean, there honestly there's not much to review on Friday, even if I mean the thing is like the 6600 reversal was like money and then um yeah, OpEx days I generally tell people not to trade. Like I don't even remember how Friday traded because like I mean if you're trading and like going rapid fire on Friday, then you deserve some L's. Like I warn people not to. Yeah, I mean Josh, like you just gotta line it up with like other like SPY and QQQ as well. Like if all three of them are showing potential bottoming patterns, like you just gotta take it. Like I think Josh, if you go to the intraday analysis channel with my agent Temu, I called out that as the node is approaching 6600, like people should be taking profits on puts because everything was approaching a floor and then it reversed hard from there. Like it reversed very, very hard from there. You just spent so how come you didn't get the discount code, dude? Yeah, you guys can keep on asking questions too. These are funny questions. Some of these are very funny questions. I get a lot of entertainment on a Saturday evening looking at some of these. BM, is that Breadman or is that some other rando? No, that can't be Breadman. No, that's not Breadman. Do you have any stop loss point if the keynote is not working? No, I size for zero in most cases, man. So I generally don't stop out. Like this is what you guys got to realize. Like just please, like I beg you all, to become a lot more proficient with growing a pair of balls and learning how to become a reversal trader. Like I tell this to everybody. I tell this to like my buddy Julio and like Guillermo and like I've been trying to like convince people to do this for like years because like if you don't want to become like every other freaking retail sheep that's getting clobbered in the market, like you got to trade the opposite as to how they're trading. Like the reason you couldn't trade the opposite of how they're trading is because you didn't have the right tools and you didn't have the right system and you didn't have the right people to tell you how institutions trade. And like now I'm teaching you this. Like this is literally like boot camp content that people at one point had to pay $25,000 for. Like I'm just giving it for free. But like just become a reversal trader. Trust me. Like if you become a reversal trader, your winning trades are going to be north of 200% to 1000% returners, meaning even if you hit one 500% trade, that covers five trades that go straight to zero. Meaning even if you have a 30% or 40% win rate, you could be a profitable trader. If you're going to become a momentum trader or you're going to become a breakout trader and you're taking profits at like 30 to 50% or like 60% every single time, you're going to need at least a 75% to like 85% win rate. And like I don't think people here are that good. Yeah, Shorty, I don't want to make your guys' life too easy though. But yeah, the replay feature is going to be nice. It's like a lot of these like features seem really trivial, and like a lot of times like people might think it's really easy to develop. But you know how fast you can actually scroll through heat maps right now, and like you know how good the performance is. Like there's a very intentional way that we designed the architecture and designed like the application logic to be able to enable people to like blow through maps that fast. So like there's a lot more complexity to it that I have to figure out to like understand how we can implement a lot more of these advanced features. We're just trying to do it in a way where we don't sacrifice the performance because I don't want people to have to wait like, 5 seconds for a map to load, it's got to be instant. Yeah, the VIX, if it's for October 22nd, then yeah, you can't really expect it. I mean, it can overshoot and come back. I mean, VIX is really good to use as a hedge, though. Like a lot of times, like I generally just say to use it as a hedge. Like don't use it as like a main position. How many contracts am I managing? I mean, sometimes I'm managing like hundreds. Like sometimes I'll be in like 500 SPX contracts just for fun. And yeah, a lot of times I do take partials. The number one tip I would give to newcomers and ways to even become a more successful trader. The number one tip I would give to newcomers is to size small until you become better. Like if you're a new trader, like you have no business exposing more than 10% into a single trade. Like I think it should be like 1% to 5% at max. Yeah, reversal trading is trading when it's scary and like that's the best time because that's when everybody's scared. Scared money don't make money. And like when you nail a couple of reversals, like you will never be able to trade a different strategy again. Like there's just too many advantages to trading reversals, which is that like you're getting in when nobody really cares to get in. You're also getting in when people are panic selling, so like you could literally limit buy contracts from people for really, really cheap. So a lot of times, like by the time you enter a trade, like you might even be up like 10 to 15% in profits already. So like a lot of times like when I'm trading like massive sizes, like sometimes like if I take like a 150K trade on SPX, like as soon as I enter, like I'm already up like 15 grand, 20 grand, and like I'll just be done. I'll be done with the trade. I don't consider pre-market and aftermarket. I always have that off. On the swings, like I generally look at the 1 hour, 4 hour, and daily. For reversals, like I generally look for capitulation candles below a certain level. And then like what I do is like I see a capitulation candle that looks really, really bearish, and then I'll put a limit buy and I'll lowball it, and then I'll try to visualize and like hope and pray that that massive capitulation candle becomes a long wick and then it starts reversing. And then a lot of times it plays out that way. Yeah, I mean, Heatseeker can help you become a better reversal trader because primarily, like, if you're a reversal trader, like, you just have to mark levels of liquidity and levels of support and resistance, and like, you would kind of have to guess if it's going to bounce or not there. But Heatseeker is a great second layer and level of confluence where, with that support level or resistance level, if you also see King Node there, then that's like double the likelihood of it reversing and bouncing there. Tyler, like that's very like dependent and variable. Like I think a lot of people here can't afford out the like in the money and at the money contracts. Like if I'm just scalping and like I'm trying to get in and out really, really quick, like a lot of times I'll play like higher delta contracts. But if I'm looking for like a bigger move and I want if I just want like a 500% or like 1000% banger, like I'll probably take the strike price that I expect to go in the money if my target hits. Yeah, sniping the bottom of V-shaped reversals are incredible. Vu's really good at it too. Um, K like on map, I don't think anything of it. Like I think the price is exactly where it needs to be based off of the map. Because you've got equal pull between 6,700 and 6,575, and it's almost at the 50% point between there. So when you look at this map, like the important thing is not to just like overlook it and be like, oh, this is a shitty map. The important thing is to see where the floor is and where the ceiling is. And if we gap down, for example, down to like 65.85 and 65.75, and that upper 6,700 is still there, like that becomes an asymmetric setup, right? Like when you're looking at the map, it doesn't matter if when you're looking at it, it is symmetric. What's important is that you're looking at the map and understanding at what point the setup becomes asymmetric. And that is when you take your entry. But if you're gonna enter here, then you're an idiot. Like you shouldn't enter here. There's nothing to trade here. Yeah, Lando, when I do my limit orders, so I don't know how many Asian people there are in here, but like, if you got like a grandma or a grandpa, like they go to the street market or something and then they see the price tag and they're like, oh, it's 350. And like what they'll do is like, they'll be like, yeah, 350, that's a little expensive. Like, let me try to negotiate for like, 340 or 330. Like, that's pretty much what I do for limit orders. Like I don't negotiate because I'm poor, right? But like I negotiate because I feel like I could just negotiate for a slightly better price. Yeah, a capitulation candle is not a hammer candle, but the ones that I enter become hammer candles because I know it's gonna reverse there. And like people will be scared to do this for a very, very long time, but like, until they get it down, like they won't be able to like fully optimize their entries and exits. Yeah, Jeff, I don't know, man. Like after everything that you learned today, like, oh, are you talking about the chart or the map? I mean, the chart looks like I mean, I don't know. PLTR, I haven't traded that thing in a while. Yeah, this one looks like it has decent upside, but I mean, it's got like 7.5 points of upside up to 185. And if you enter on Monday, like you could just get theta effect. Yeah. Yeah, our grandmas go from 350 all the way down to 50. I think the newer generation is a little bit more they're a little bit more cognizant and they don't want to get kicked out. I guess the way you got to say it is like if there's one unique product on the street market that your grandma wants to get, and there's a lot of other people lined up for it, and like, you really want to get it, then you're not gonna lowball from 350 all the way to 50. But you might be like, I'll do 345 or 350, 340, like, something like that, right? Or if you really want it, you're just gonna slap the ask or you're gonna buy above ask. Like that's the kind of mindset you have to have though, right? It's like if you place a limit buy and if you don't get filled, then fuck it. Like there's so many other trades you could take, right? Like you have to have an abundance mindset when you're trading. Like when you're in a scarcity market where you're trading and you're like, oh shit, if I miss this trade, like I'm fucked because I'm not gonna be able to make another winning trade. Like you got to go hit the maps or go hit the charts because there's like 1,000 trades you could take out there. So like you have to have an abundance mindset because if you're in a scarcity mindset, like you're gonna be trading out of desperation, and desperation never leads to good things. Yeah, Stu, I mentioned previously as well, like EOS map was just added last week, so like I wouldn't trust it too much right now. I might just remove it actually. Let me just remove it right now because I feel like I'm misleading too many people with it. Yeah, I just removed EOS and GE. I'll add it back later after I add the setting. When I do SPX trade, do I set up a stop loss if I'm trading at 10% of your portfolio size? And what expiration date of SPX contract do you usually trade? Man, this guy's just trying to trade literally like me or something, huh? So I usually always do 0 day expiration for SPX because I'm not looking to stay in a trade for long. Yeah, I mean the reversals sometimes take time, but like if you're very, very precise in terms of how you're sniping and you're using limit orders, then generally you could get in and out with like 20 to 30% pretty quick. Yeah, again, like I would have to say like the most important thing is like as you're scrolling through the maps today, if you're looking and the price is in no man's land, once again, that doesn't mean it's a bad map. It just means that the map is not ripe to be executed on yet. What you could do is you could look at it and you're like, okay, like this map is in no man's land, but if it starts to hit this side of the price range, then I would want to enter because my risk to reward would be asymmetric, where it's like a 3 to 1 or like a 5 to 1 or a 7 to 1 return, and I would want to take that. Like you just keep an eye on it or like favorite it, and then throughout the week, the price might dip towards one side of the extreme range, and like that's when you execute the trade. Like you don't just look at it and be like, this map sucks, I'm not going to take it. Because even if you see a very asymmetric setup right now, depending on what the market does over the weekend, price might open like smack dab in the middle of it, and it's going to turn into a shitty one. So that's why I'm saying, like, don't just scroll through the maps, but like pick out your favorite tickers and like the ones you understand how to trade very, very well. Like every ticker has a personality and a characteristic. And like I highly encourage people to like not try to trade 300 tickers really, really well. Just pick out like a handful of them that you're like really, really good at and like master them. And like look at the map, pull up the chart, drop the levels, and like just be ready to execute through the week. Yeah, I'm not really seeing anything on Target that stands out to me because it's right at the key node right now. But if it dipped down to like 87 or 86, like I would be interested in a swing trade for like 3 to 4 weeks out. Right. For reversals in my trading, is it even split of calls and puts or do you capital? Not sure if I understood that question properly. For reversals, like I'll play reversals from the upside and I'll play reversals from the downside too. It just depends on what opportunities the market gives me. Like I don't really have a bias. Like I'll play puts if the market's going to give me an opportunity on puts, and I'll play calls if the opportunity provides calls. And even for puts, like you could buy limit buys into a massive green candle, right? Like you'll get like a Hulk dodo like green candle, and like I'll short that if it's building up into a major level because I'll expect that to turn into inverted hammer or a gravestone doji or something. Yeah, Devinder, that would be pretty cool. I'm actually looking to hire somebody to build out a charting platform for us so that we can have full control over how it plays around with Heatseeker and FlowSeeker. So if anybody knows how to develop a charting platform, then hit me up. Got a lot of work for you. Yeah, Circle looks pretty interesting. It's got a pretty like a pretty important node at like 149. Yeah. But this one is a crypto related ticker, right? I think it is. But yeah, Circle, like even from a pure PA standpoint, like anywhere near like 123 is like a good buy. Like this one can become like a double bottom and rip off of like 122, 123. Yeah, MicroStrategy could be good if Bitcoin gets bids. I think people are just like burnt out from it, but MicroStrategy near 284 should be like a good dip buy. Like you see right here. Like that's where it's trying to reclaim that right now, but it doesn't become relevant unless it's able to reclaim this one right here. So it's kind of in this like shitty range where it's like, do I break down from here or do I reclaim 292 and slingshot back upwards? kind of like that. I primarily watch price on a 3 minute chart because I'm a day trader. Yeah. A lot of times I'm just looking at the 3 minute chart here. Yeah, I don't know. CRWV seems to be like an obsession for a lot of people, but I bought this one off the lows on my dub port and then I sold it at like 130 and I haven't looked back at it. Yeah. Yeah, nobody needs indicators. Like, don't use indicators. Like, if you're using an indicator, like, just stop using it. It's not really helpful. Like, all the indicators I have and use, like, I just use them purely for aesthetics because, like, I like my charts to look nice and clean. Yeah, I mean, I use glitch too, but, like, even that, like, I'm not super dependent on it. Like, I use that when I want to be lazy. But, like, most times, like, I just draw lines. Like, if you draw lines, like, you see everything, right? It's like, look at this double bottom right here. Look at this rejection right here. Look at another rejection right here. Like, it's easy. Like the reason why TA is hard for a lot of people is because you have too much shit on your charts. No, I don't even know what an EMA is, man. Like I don't use EMAs. Like EMAs probably work really good in trending markets, but they probably really suck in like ranging and like choppy markets. The problem with most indicators is that they're meant to be used in a specific type of market condition. The problem with that is that the market is never always in the same condition. Like some days it's gonna trend, some days it's gonna chop and like drag and like it's just not reliable. Like I bet 90% of the people that are in this chat will do a lot better if they use zero indicators. Yeah, don't play bounces off of EMAs. Like just play bounces off of like previous levels or like play rejections off of previous levels, right? It's like one of the questions somebody asked me earlier is like, "Oh, how do you know it's going to reject a resistance level, right?" So here's how I tell you how like how I know it's going to reject a resistance level. Because the last time it rejected it, it had a 43 point move to the downside. Like the bears rejected it here, sent it down 43%. So there's a very high likelihood as it approaches that level, the bears are going to try to defend that level, right? They're just going to keep on defending that level. Because if the bulls are able to break above it, then the bears are going to get squeezed. Like they're going to be underwater on their shorts. So the problem with using a bunch of indicators is that you become so focused on using the technical indicators that are all lagging indicators that are based off of past price action that you're not looking into the market psychology of what is happening at these levels. Like I literally just told you how I know it's going to reject off of 148 and like what I'm thinking and understanding about market psychology at this level. Like that's the most important thing, right? Like you just have to understand the psychology of the market and the psychology of the participants. And the psychology of the participants is not everybody's looking at this EMA line and saying like, "Oh, it's gonna bounce here, we're all gonna buy." Because like there's so many different EMAs. Like there's like the 9 EMA, there's the 21, there's like the 50, there's the 55, there's like the 144. There's like so fucking many of them. It's like we're gonna be like, "Oh, it doesn't bounce at the 9, it's gonna bounce at the 14. Oh, it doesn't bounce there, it's gonna bounce at the 21." Like there's just way too much shit. Like if you're using indicators, the reason it's gonna take you so long to improve and become profitable is because you're always gonna blame the indicator instead of blaming yourself for not being able to read the markets. Like indicators are there to become a scapegoat to blame, to prevent and hinder people from truly improving how they trade. Like when you're trading a naked chart, like what are you gonna blame if like you fuck up, right? It's like there's nothing to blame. It's like I just read price wrong, so I need to get better. But if you're using the 90 MA and it sucks, you're gonna be like, oh, the 90 MA is trash. Like I'm gonna switch to the 8. Then you're gonna be like, oh, the 8 is like too tight and it's too close. I'm gonna switch to the 21. You know, it's like that's the mindset that indicators get people in. So you end up in this little circle jerk of like going from indicator to indicator to going from like indicator period to indicator period. And like you're never truly improving what you need to be improving, which is like your execution, being able to read raw price action, being able to focus on your own mentality and psychology and stop being a little, little punk. Like, you know what I mean? It's like you got to focus on your psychology and mentality, and you can't ever get there unless you have a repeatable technical strategy that you're falling back on. I don't think retail's looking at the same thing I'm looking at because they're too busy looking at EMAs and MACDs and RSIs and Bollinger Bands and all that shit. Yeah. Yeah, Geosh, man, you just got to get out of your own way, man. It's like you just got to keep it simple and like people overcomplicate the simplest things and like that just results in like analysis by paralysis. Like just keep it simple, man. Like trading should be simple. Like the reason trading needs to be simple is because the most complex part about it is like your psychology. And like if you make your trading strategy and your technical analysis complex, you never get to the point where you have it solidified in stone, which enables and allows you to get to the point to sharpen your psychology and your mentality. Like how many retail traders do you know who are trading naked charts like I am? Like every fucking retail chart I look at has like 30 lines on it. So if you don't want to trade like the rest of retail, just go freaking delete all those indicators. Like I don't even need that subgraph. Like the only reason I have this subgraph is because it looks cool. Like I don't even look at that thing. Like I'll literally trade like this. Like I'll literally trade like this and just use Heatseeker and that's it. That's literally all I need and all I trade with. I don't give a fuck what EMAs are doing. By the time price claims the EMA, like it's already gone. It's done. Yeah, you can plot heat nodes on plain charts. Yeah, like I use squares too. Like, I'll use like, I've got fibs, I've got like reverse fib sets. I've got like these are the most common ones I use. Like I'll use like rectangles to draw zones. Um, and I think that's really it. Like I don't think I use anything else. I mean, I've got it all here on my favorite. Like even this parallel channel, like I don't even use this parallel channel anymore. Like channels are useless. Yeah, like you see everything I use here. Like this favorites bar are like the only indicators I use. They're all just lines. Yeah, if it works for you, that's fine, man. Like I got nothing against people that use indicators and if it works for them. I just like there's just a bunch of people that are not profitable that have like 10 indicators and I tell them to go back to the basics. Like if you suck shit at reading price, you have no business having indicators on your chart. If you are good at reading price, then you can add all the fucking indicators on your chart and I don't care. But like the reason why people never improve at reading price is because their entire chart is cluttered with a bunch of lines and like they're not even able to see what the candles are doing or where the levels are. Like I don't I like I've got nothing against people that use indicators to supplement their ability to precisely read price. But if you're dependent on MACD because you don't want to learn how to pre-price, then you've got like read price, then you've got a problem. Yeah, Shorty, like I did a lot of algorithmic trading in the past, and like I actually have a forex trading algorithm that is actually profitable that I can use on like currency pairs and stuff like that. And I would use that to like automatically pass like forex prop firm challenges a long time ago. But even that one, like all of the indicators. I actually had a lot of mathematical ones. Like they were all purely mathematical based and like probability based. Like they weren't like MACD or RSI or anything like that. Yeah, just try that. Like I'll like I advise everybody like just go back to the basics. Like and Heatseeker is like an entirely new tool. Like you've never used it before. It's an entirely new concept. So like when you're trying to use it, if you've already been profitable in the past, like just keep doing what you're doing and layer it on. But if you're coming from a point of like not being profitable or not knowing what the fuck you're doing, like just just take my advice and like learn to read price and like just learn to read and watch like the levels where price is gonna bounce, like where the liquidity is gonna sweep. Like, for example, like this is a liquidity sweep right here, right? Like if you're a breakout trader, like you're literally entering on this candle expecting a breakout, and then you got fucked, right? And then this is the second one, you got fucked again. All right. And like, don't expect to get good at this within like 2 or 3 days. Like, I mean, people spend years doing this shit. Like, the good thing about just being here with like a network of people that all want to improve, though, is that like you actually have a good guide now that's gonna help you prevent making the same mistakes that every trader is making. So just make the best of it. Yeah, I mean, yeah, that's what support and resistance is, Josh. I just play reactions off of previous levels. It's even better if you get like a little sweep below it. Like that's literally my bread and butter setup. I mean Fig was like a freaking incredible example, by the way. Like if you line this up with Heatseeker, like I think if the Heatseeker node was at like 50, for example, right? It was at 50. And like look how perfectly this lined up. So watch this. Let me actually do why is my okay. All right. So that is the Heatseeker level, right? Like, I don't think anybody should have missed this trade. Like, this is the HS King node, and then there was another one up at like 64 or something like that. So, if you're trading something like this, you're entering there, and your target's here. Like, the nodes actually rolled up even higher, which is why it went higher, but let's see what the risk to reward here would have been, right? Let's say you had like a 2 point stop, for example, all the way down to 48. Okay? Dude, you still got a 7-to-1 risk to reward ratio here on this trade. Like, this is the kind of shit that I want people to take. All right, because even from a price action standpoint, this was the IPO low, right? It's a very, very small, tiny, tiny chance that this breaks below and keeps on going down, especially with the Heatseeker keynote at 50, right? Over here, you've got a perfect sweep of liquidity. What this means is that everybody that had their stop loss on longs below the IPO low, they got liquidated. And guess who buys those shares that are getting liquidated? The institutions are scooping them up. So they scoop them up here, and then they reverse it, and then they drop the news about the partnership with OpenAI, and then it fucking squeezed all the way up here. Like, if you are proficient with Heatseeker and you know how to draw support and resistance and identify potential areas of liquidity, like you should be able to catch moves like this very, very easily. And just that is a 44% move you could have caught. And how long? Within 7 days, you catch a 44% move. It doesn't get any better than that. All right, so that's pretty much like the most prime example of like my TA strategy. Like that's all I do. Like it's IPO low. It's like okay, it's never been tested. So if it tests here, there's a 67% chance of it bouncing. There's even confluence with the Heatseeker King node. That makes it like a 75 to like 85% chance of bouncing. And like this is where you enter. Like you enter right here. But if you're waiting for confirmation, like, I mean, fucking people are entering like all the way up here. Like, you've already missed a 10-point move. Your risk to reward is not that good anymore, right? Like, what are you gonna do if you enter up there? Like, let's look at what your risk to reward will be if you enter on the breakout above there. Like, your stop loss is gonna be what, below the IPO low? And then your target is like, I mean, let's just assume your target is up here. Like, you got a one, it's a 1-to-1 risk to reward ratio. Like, that's a symmetric setup and trade. Like, it's not worth taking. So by the time you wait for confirmation, like this shit's long gone and your risk to reward doesn't make sense anymore. Yeah, no problem, Josh. Like, keep on asking questions, dude, but like, just keep it simple, man. Like, I DM'd you the other day and I told you, like, what I think will help you improve. It's just be very simple. You want me to show the heat map of the Figma? Yeah, hold on just a second. One second. I mean, you could have pulled it up yourself so I can go sleep, but let me pull it up real quick. All right. October 1st, 2025. Yeah, this shit was like fucking brain dead simple, bro. Like if anybody looks at this, like they'll be fucking kicking themselves for missing it because it's so easy to see. All right, watch everybody. There's a king node down here at 50, right? Do you see this? Do you see this one right here? That's literally the last line of defense, okay? Is everybody watching my trading view here? Okay, so that's the last line of defense, the 50. There's literally nothing below that, okay? And then you've got a node up to 55, which is here. You've got another one up to 58, which is here, right? And I'll show you another one, okay? So this one would have been a swing trade, right? Given that we're nailing the absolute bottom. Look at this Vex map. The Vex map is showing you, even before it taps 50, there's massive nodes up at 55 and 58. The reason why I love this is because it's perfectly aligned with what the Gex upside targets was showing. The fact that the Gex at 50 is even lighter indicates to me that there's going to be a massive slingshot move back to the upside. Not only that, if this column washes off, for example, like you've got a node all the way up here at 73.5, you got one here at 70, and did we hit 70? Somebody tell me, did we hit 70? Like fucking perfect. Like that's a 20-point move. Like this is literally an S tier setup. Like if you see a move or a setup like this, you do not miss it. Like you just don't miss it. Like I actually caught this one too. Sadly, I sold it at like freaking 59 or something like that because like I trade pretty conservatively on my dub portfolio. And I ended up taking DKNG instead. Yeah, so I played DKNG. Like I caught this like DKNG was like a very clean move from the lows. And then I sold it at like 30 35 something right here. So I don't know if people follow my dub portfolio, but I caught this move. Yeah, I mean, if you took profits before 70, like that's not a bad thing to do. Like you're still catching I mean, even if you took profits at 60, like that's still a 20% move in like 3 or 4 days. Like that's freaking incredible. Yeah, I have Oklo, LEU, and then I have three nuclear tickers on there, the ones that I like to trade. But yeah, I can add the other ones too. My portfolio is glitchy. I'm up this one on dub. Do the maps get more messy and less accurate during earnings? Yeah, it's possible. I mean, the dealers are gonna get a lot more active as it approaches earnings. Yeah, the handwritten note on X, like I was literally walking through people in person, like at my house in terms of like how I do TA, and I was like, that's literally all you have to know. Like that's literally all I use. And like I'm probably like I would say like I'm probably in like the top 5% of traders in the world, and like that's all I use. So like that's just proof and evidence that you don't need like 10 or 20 different indicators. Mhm. Yeah, when I'm drawing lines, no, I'm not just like I actually don't draw heat map nodes on the charts. I'm just drawing like support and resistance. And I only care about the support and resistance levels that are close to current price. Because like why would I care to draw a level that's all the way up here? Like it's not gonna hit for a while, right? So, like another tip that I have for people is like when you're drawing support and resistance levels, your goal is not to draw a line on every single level. Like you're not doing something like this and like cluttering your chart because once again, like now you're adding clutter to your chart, right? Like why do I care about all these levels up here when it hasn't even cleared 34 yet, right? So what I usually do is like I'll delete these and I'll only have like the ones nearby. Like I'll be right here. And then yeah, probably like down here. So that's usually how I draw my lines. Like I usually have like two or three lines at most. So very, very important lesson when you're drawing support and resistance, like just focus on the ones that are relevant. Like if you draw like I know some people got like fucking shit ton they got like fucking so many lines like this. They got like lines everywhere and I'm like, fuck, how do you guys even trade this? Like it's just too much. Like it's too distracting. Vance, like you just saw an example of how I traded Figma where I consider the nodes on further dated contracts. If I see something stair stepping up into the right, and for the current column it's slamming down into like a support node, then I'll go ahead and take a swing trade. Yeah, if anybody wants to copy me on Dub, yeah, hold on, let me go and share my referral link. I think everybody gets like 20 bucks if they sign up with it. Yeah, I'm up like 70% on mine, and like I trade my dub with like very, very minimal drawdown because I have $300,000 worth of like strangers following me now. Um, I Yeah, I trade very conservatively. Like ever since I saw the VIX pointing up to 32, I actually went all cash and I've barely been trading on it because I want to wait for the drawdown to happen first and then we'll buy cheaper. Yeah, swing trades I size for zero. I size for zero on like almost everything. Like the only thing I don't size for zero on is like if I'm taking a heavy like 0 day expiration trade for SPX. Yeah, sizing for zero is one of the best things that newer traders can do. So think about it this way. Like the whole goal of the stock market is to transfer wealth from the poor, like from the impatient to the patient. Okay. Another way I put it, the stock market is a vehicle for like getting all of the money transferred over from like the average Joe and like poor people to the rich people. Because ultimately, like that's how that's how they control people, right? Like it's through money these days, and it's through bills and like it's through rent and stuff like that. So how can the system siphon as much money out of retailers as possible? It's by triggering as many stop losses as they potentially can, right? Well, if you want to fuck around and play chess with these people that are trying to siphon all your goddamn money, just don't have a stop loss. Then what are they gonna do? Like they won't even look at you anymore. They won't even go for you anymore at that point. Like your stop losses are not showing up on their on their monitors because you don't have a stop loss.
Quick question.
Yeah, what's up, dude?
How much do you think that technical analysis weighs into mental analysis?
How much does technical analysis weigh into mental analysis? I would say probably at least half, right? Because, and the reason I say this, and the reason I say trade reversals is because the better of an entry you're able to get, the less drawdown you're going to have. And the less drawdown you're going to have, the easier it is on your mental and your psychology because you don't have to see your contracts go down like 50% to 70% before they finally go green. The problem with trading momentum or trading breakouts is the fact that you're chasing price. So not only do you have to slap the ask to be able to get in, on top of that, you're buying after the IV on those contracts and the premiums on those contracts are already inflated. So what happens when a pullback happens? The premiums not only deflate, but the delta also crushes your contract. So you've got a double whammy on your premiums, right? So even on a small pullback candle, you can be down like 40 or 50%. that does really, really bad things to your mentality and your psychology because you know if you get another red candle or two after that initial pullback, your contracts are going to be down 70 or 80% and you're not going to be able to come back green from them. So this is why I preach buying the floors, like buying low and selling high, because that enables you to have less of a drawdown. Like your contracts might go down like 10 to 15% or like 20% or 30%, right? But there's a much higher likelihood it's going to be able to go green in the near future. So I actually don't think technical analysis and like psychology and mentality are separate. Like they need to coexist and they kind of correlate with each other. And the technical analysis that I personally teach are ones that enable you to have a sharper psychology and mentality by minimizing your drawdown and by having a lot more upside than potential downside.
Okay, so essentially you're saying, play out the reversal and then let the runners run. But like if you're playing the reversal, how much, like let's say SPX was 6,600, how much downside would you say you would give it if it's 6,610?
If it's at 6610,
And you're playing like a 6,600 reversal on the gamma exposure.
yeah, then I would start putting my limit buys as it's approaching 6605. And quite honestly, like I would just fucking, I mean, I would be expecting a bounce, especially if it's correlating with SPY and QQQ as well. Like those, dude, those setups work out like I would say like 85 to 90% of the time. Like when the SPY, QQQ, and SPX, all three of them are in alignment in terms of a potential bounce, like there's a very, very high probability of that playing out. But like let's say like I'm in fucking deep. Like let's say I took like a 250K trade or something and I'm like, yeah, I can't hold this one to zero because if I hold it to zero, I'm gonna be down like a crazy amount, right? At that point, like I would probably wait for like 65.95 to 65.94. And then if there's no chance or sign or hope of a bounce, then I'll cut it at that point.
All right, appreciate it. Thank you.
No problem. No problem. Like once you start buying limit bids into reversal levels, like a lot of what I sell will make a lot more sense. Like the premiums get crushed on red candles for calls. So like those are like the opportunities you have to pick up on. Like you want to buy when premiums are low and you want to sell when premiums are high. This is why even when I tell people to take profits, I always tell people to take profits into green candles. Like don't take profits on calls just because a support level is breaking after it went up. You should be proactively taking profits on calls as it's printing massive green Hulk candles into the overhead resistance and supply levels. That way you're able to scale out when the premiums are inflated. So you're essentially selling into somebody who's like chasing. Like you want to buy from people that are panic selling and you want to sell it into people that are chasing. Like that is how you make money in the markets. A lot of people will be in calls and they'll be like, "Oh shit, yeah, I'm up like 70%. Like, yeah, I'll go ahead and sell if it breaks this level." And then fuck, like when it breaks that level, like they went from like plus 70% to like plus 20%. I'm like, man, you should have just sold it. Like, when you should have just sold like on a strong green candle, you would have got out like 80, 85%, right? So like like in trading, like everything is about proactivity. Like it's all about playing chess. It's not playing checkers. Like it's the simplest way to put it. It's like you always need to be predicting the next move and like forecasting the next move, not like reacting to what the opponent is doing. So like be in more of a chess-oriented mindset, not in a checkers mindset, and like you'll be very, very well off. All right, good session, everybody. Hopefully that one helped out. I think I talked about just a lot more fundamentals of trading and psychology than the Heatseeker itself. But, quite honestly, like a lot of what I shared today is like a prerequisite to becoming a good trader. Like, just because you have Heatseeker doesn't mean like you're gonna be able to be profitable. Like you still got to put in time, you still got to put in effort. But like this is pretty much like a quick, accelerated, condensed version of like a boot camp I did a long time ago. So I think if you watch over this and like you remember these things, like, you'll be very well off. All right. Yeah, I'll do one of these in person. I think next year, like I'm planning to do like an in-person like TA boot camp or like a trading psychology boot camp as well. So for anybody that needs like more of this, then that would probably be a good event to come out to.
Hey guys, I just want to say, remember, we are not chasers. We try to play the reversal. So I want to put that out there. I want everybody to stick to that. I joined a little bit late, but I want everybody to know that.
All right, thank you, iPhone 155. Thank you for the reminder, buddy.
Of course.
All right, I'll talk to y'all later. Bye.